Hi everybody, it is Sunday, February 23rd, 2020. Taking a look at the S&P 500, and let's explore and explain out a little bit more of the downside, just in case we don't get our move fueled by Warren Buffett on Monday that would get us back above the 10-day, because that's what we need in order to get to back to the upside, is a move back up through our 10-day simple moving average. There is already a note and a plan for both upside and downside posted to the thread that starts the week. But this video, I'm going to just flesh out the downside and explain what's going on a little bit in case we do get a move further down overnight tonight on ES. Very good chance, even if we do, that we reverse and come back up and we're right back to where we closed, maybe even opening a little higher on Monday because Warren Buffett is going to be on. But if we fail again at the 10-day, this whole idea could take place, and what I'm about to talk about in this video could go ahead and play through for Monday after all, if we fail the 10-day in any way during the course of trading on Monday. Okay, here is not the bull fork chart, but the fork chart that I have been introducing the last 3-4 weeks in a row on the weekend videos. Here is the accelerated bull fork that we've been in, the top of it, the median line, and the bottom of it. And then these dotted lines mark off the midpoint between the top and the median and the bottom. So here is that halfway point portion between the median and the bottom of it. You can see that the 50-day simple moving average aligns right to this as well. It's sitting right on, in fact, rising just above this midpoint line. When we look to the left, we see that this sell-off that we had at the end of January, where we fully back-tested the low for 2020, held above it and reversed, was not only the low right here, but also this midpoint line and the 50-day simple moving average. So it stands to reason that if we come in on Monday and we are gapped down below the 20-day, or even if we are trading up here but lose our 20-day simple moving average on Monday, that we are going to be working our way back here to backtest the 50-day. When we hold the cursor on this area and look to the left, where does it align to? It aligns to a little look below, or a look right at this low that we were trading at on February 4th, the second trading day for the month of February. What was significant about this day? Look at it. It was the day that we gapped up open right on the 10 and the 20-day simple moving average. What had been going on coming into this day was this. We were watching this bearish cross of the 10-day down through the 20-day. Here was our final trading day of January, and then our turnaround on Monday when we came back to work, Monday, February 3rd. We gapped up open, we traded up, working our way towards this bearish cross, but sellers came in and we got a little head fake sell off at the end of in the afternoon and closed down here below the midpoint on the day, only to come in the next day on a huge gap up open, sitting right on the 10 and the 20-day, and from there our leg took off into a new all-time high. So if we break this, we've already broken the 10-day, so if now we break the 20-day, that sort of is the antithesis of this day, and we probably come down here to back test the next set of elements right down here, and those elements align with holding support of that day in the first place. So it would be okay to break this as long as this support holds up and maybe this gap stays open between the 3rd and the 4th of February. Okay, now what happens if we take another little leg down, but we suddenly reverse and get nowhere near to that 50-day simple moving average on Monday or overnight tonight? Here is the time frame, the weekly time frame for the S&P 500. If you were looking at this and seeing this on a daily time frame, you would look at this and say, wow, that is a classic inside day. Here is the body of this candle sitting inside the range of the previous body of the previous candle. This previous candle was very bullish. It opened on its low and it closed right up on its high, just off of it a tiny bit. And then the following candle, it was an inside one. Well, this is a weekly time frame. So this was February week 2, and here was February week 3, sitting right inside February week 2. So what is significant about that? Here was the low of February week 2. 33.1777. If we were to take a look below the 20-day simple moving average, which is right here at 33.23 and change, and it's flat, so it looks like it's going to be flat. It could even tick down a little on Monday's open, but at least I think it'll be flat, so maybe still at about 33.23. This weekly time frame level is 33.37 and change. A little 5-point look below the 20-day in reverse would be a classic kind of move, and nobody would be understanding why aren't we trading down to 3,300 and breaking that? You know, it's because of this, you dum-dum. It's because it's the weekly time frame. You've got to look at more than just the daily time frame. So the weekly time frame would have us saving the day, just taking a little look below the 20-day and reversing. So that's the move you got to keep in mind. And if that's the way things work out and we don't get that move all the way down to the 50-day, if all we do is take a little look below the 20-day, I think that would be your dip to buy for the move up to go resolve 33.97.50. But of course, that doesn't mean go buy the 33.95 or 3,400 calls. That means look at where the $8 window is at, see if there's good volume on it, and buy those. That's what I would do. Anyway, so that would be your little look below the 20-day and fail kind of thing. And here, when we look at the roadmap, here is what happened on Friday. Here was our low and reverse, and our close back up at 33.77, 33.37. I'm sorry. If we were to break the 20-day, here would be that little look below it and reverse, and that would align with what's going on in the weekly time frame. If we break below that level from the weekly time frame, we get into this gap. This gap is significant when you look to the left. Where is it? It's this gap here that takes us back to that day where we gapped up open on the 10 and the 20-day simple moving average. So we would trade down through this gap, test and maybe reverse at above this, above this gap. Where is that gap at? That's at 32.97. There's your perfect test. Maybe look above or look below 3,300 and reverse. And then if that breaks, then we've got 32.80. which is where our 50-day simple moving average is moving up to. That's where gap support is back here on the low of that day. If we take a little look below 32.80 and reverse from there, that all works perfectly with what we've mapped out on the other charts. Okay, I hope that this makes sense. So just to go over it one final time, in order to move to the upside, we have to come in on Monday, and we've got to get through the 10-day simple moving average. If we come in and we are higher at all, we're looking for the opening, Friday's opening to hold for us. But if it doesn't, or if we gap down open below Friday's close, then we look for the 20-day. If we take only a little look below the 20-day, it has to do with the weekly time frame. But if we break all of this, then we've got gap 1, test, maybe reverse. If it doesn't hold, then we have gap number 2, gap support, the 50-day, and we know that dividing line between the median and the bottom of the fork is right in here. Hope that all makes sense and helps guide you through the levels. Enjoy the rest of your Sunday. Good luck and good trading.